We're going to also be talking a little AI this morning because we got C3.ai, we've got Google's Gemini making waves, so definitely some interesting action on that front. First, let's go to that big sell-off on C3.ai, though, the namesake, the ticker itself, AI, Jenny Horne with the update. So pretty big sell-off here. Second quarter in a row now, the stock seems to have disappointed investors. How come?
It does. And it seems like this name right now is being priced so much to perfection, or at least the bar is set so high for this name, given the fact that it had run up 172% on the year into today's open. So difficult to then meet what has been a stellar year for this company. It's been very much affiliated with all of the things growing AI and the push into AI. But what's concerning is their weaker than expected guidance, I think, then signals the fact that this growth right now is run ahead of itself, because if you're not able to then match your results for the next fiscal year with the pace of growth, it's like there's that disconnect now that we're seeing. However, it was a mixed picture. It wasn't all negative. We did see revenue come in around 73.2 million. That did miss estimates that called for around 74 million roughly in revenue. 13 cents losses, though, did beat expectations for losses of around 18 cents per share. Total revenues, though, were up 17% year over year, so still growing at a relatively healthy pace, while subscription revenues rose 12% from a year ago. And customer engagement was up 81% from the same period last year. The company did say it closed 62 customer agreements during the past quarter, including around 36 pilots. They also did end the quarter with around 762 million in cash and cash equivalents. But the CEO and chairman of the company said they saw unprecedented interest and traction in their generative AI offerings. Importantly, they are seeing a return to accelerating revenue growth as they continue their transition to a consumption-based pricing model. Now, they do see third quarter revenue falling between around 74 to 78 million. They did reaffirm that full year 2024 revenue is still expected to be what they had previously set forth. That's 295 to 320 million. But again, I think that right now, when you're giving somewhat of a lackluster picture of what the next quarter, next fiscal year looks like, when your stock has risen this much, it says now, as a company, you need to grow as much as the share price has. I mean, I just think that it's like reasonably thinking that for a name that's been such the AI trade, you have to have then the results to back that.
100%. I have to say that, I'm not surprised that the market's not satisfied with just 11% growth. We talked about this name a few times coming into this with George and Kevin Green and others. It just always surprised me that the growth is so low. And if you want to trade AI, and NVIDIA's just blowing it out of the water, and you've got companies that are doing way more than 10% growth. I mean, why would you go for C3? I mean, it just seems like even if the product is good and they're gaining users and there's activity building, I mean, numbers talk, and
the pure play.
Don't lie.
I think because it's seen as the pure play into AI, right? NVIDIA has other. I mean, they have gaming, they have the data centers.
Sure.
This is truly AI, I suppose. But then there's the risk of that. I mean, this is a major investment into what is still being developed in terms of the AI offerings.
Yeah, exactly. That's where I feel like the picks and shovels trade just has been doing a lot better. All right, still at $27 almost, up from 10 to start the year, but now we have erased almost 50% off the highs. Not quite, but definitely been a rough 6 months for this thing. All right, rough couple years here for GameStop, but down 4%. $30 at one point this year, so it seems like the memification is fully deflated almost at this point?
I think so, especially when you look at AMC is even more brutal. But anytime I say this name is a meme stock, I just get absolutely ripped apart. But I will say, to justify that, it is still a meme stock, because right now the overall percentage of its float sold short is 24%. I mean, that is ridiculously high.
It's the OG meme stock. They made a movie about it.
I mean, right. And it's a pretty good movie, actually. But this wasn't, I think, a reaction just to its third quarter earnings specifically. I think also is they've employed this really unusual strategy to make more money, frankly. Now, of course, Ryan Cohen has taken over as CEO of this company and now is helping manage its portfolio, and very much so just making various investments to strengthen their balance sheet. He did take over in September and has served on their board since January of 2021 and is now acting as an investment manager also in running the business. Well, also at first he was this activist investor. So this is was one of the more bizarre moves that we've really ever seen, as the company's making this decision to invest in other equities other than its own, which they're transparent about, implying that basically that Ryan Cohen believes that they will achieve better returns by buying equities that aren't even its own. I mean, that's in itself kind of alarming. And this company has always done very unique things, so I guess I'm frankly not surprised. But I do think that that's very interesting that he's being public with the fact that he's investing elsewhere. I mean, what have you. But he didn't immediately respond about this particularly. However, in the third quarter earnings, we saw they lowered their estimates for earnings per share and revenue overall, or their expectations now going forward have been somewhat lackluster. This name doesn't specifically, though, give guidance, just based on sentiment right now. Wedbush is one that sees this now as more of a disappointment coming ahead. I think no surprise, the video game landscape has been evolving rapidly, so I think that is something to make sense that we're not seeing growth rates on this name like we would say a tech name. But all in all, we did see, as far as earnings win, it was better than perhaps feared, but the growth story right now isn't there, and that's what I think most of the street is focused on.
Also, I feel like it's worth noting this is a big week for video games in general with the GTA unveil. Any other sector, you get a big hype train like that leaving the station, and it's going to carry some stuff with it. But it's like GameStop is not even connected to releases because nobody's going to buy them from GameStop. So it's just, who knows what the plan is at this point. No conference call. Cohen doesn't really tell us anything at this point. So it just seems like, to your point, AMC is already completely deflated and back to where it was pre-craziness. GameStop still has some to give if it's going to close that gap as well. So almost kind of feels like a do not touch until it's completely exhausted all that memification. Thanks, Jenny Horne, for the look at GameStop and AI. We'll talk some more AI later on the day with our developing story in Alphabet, which is leading the market right now.